the Fractal's Indicator. In this video you will learn what a fractal indicator is, what an up and down fractal looks like on your chart, what you need to look for to confirm a completed fractal, how to determine market direction with fractals, how to use fractals to place your stop loss. A fractal indicator is a pattern that is made up of 5 candlesticks. It is used to identify reversal points in the market as it indicates where price has struggled to move higher or lower. As a trader, you can use fractals to get an idea of the potential direction price may move in. There are 2 types of fractals, an up fractal and a down fractal. An up fractal is formed when the middle candle is the highest point in the 5-candle pattern. There are 2 candles on the left-hand side with highs lower than the center candle's high, and 2 candles on the right-hand side with the highs also lower than the center candle's high. A down fractal is the opposite to an up fractal, in that it is formed when the middle candle is the lowest point in the 5-candle pattern. There are 2 candles on the left-hand side with lows higher than the center candle lows, and 2 candles on the right-hand side with lows also higher than the center candle's lows. Because a fractal is a 5-candle pattern, it is very important to note that the 5th candle must complete and close before the fractal can be used to make any trading decisions. If the 5th candle is not closed, price could easily move above the highest high or below the lowest low, invalidating the potential fractal and causing the fractal indicator to disappear from the chart. You must therefore wait for all 5 candles to close for the pattern to be valid. As a trader, you can use fractals to determine market direction. A very simple method is to look for a broken fractal. A fractal is broken when you have a completed 5-candle pattern and price then breaks the high or low of the pattern. If price breaks an up fractal, then the direction of the market would be considered to be up, and you would be only looking for buying opportunities. And if price breaks a down fractal, then the market direction would be considered to be down, and you would only be looking for selling opportunities. It is important to note that fractals tend to be more reliable indicators of market direction when used on the higher time frames. As well as being used for market direction, another way traders can use fractals is for stop placement. For example, once you have entered a short trade, you can use the most recent up fractal to place your stop loss. When it comes to placing the stop loss, traders use the tip of the actual fractal indicator rather than the candle high. This process would be reversed for a long trade, where you would look to use the tip of the down fractal to place your stop. So far, you have learned that a fractal is an indicator that shows a potential reversal point in the markets. They form when a particular price action occurs on a chart. The pattern is composed of 5 candlesticks. An up fractal forms over a candle that has 2 candles to the left and right with lower highs. A down fractal forms under a candle with 2 candles to the left and the right that have higher lows. Fractal indicators can be used to determine the direction of the market when the price breaks through the highest high or the lowest low of the pattern. Fractals can be used to place stop losses.